Look, I may be sitting here making YouTube videos now, but don't be fooled. I've spent a long, long time in the financial world. How long? Well, let's just say longer than most of you watching. And no, I'm not giving away my age, but here I am on YouTube. What does that tell you? It tells you a dirty little secret. Most so-called financial experts don't actually have money. Sounds absurd, right? Nope, it's absolutely true. And by the end of this video, you'll know exactly why. Now, let's address the fantasy so many of you cling to, day trading. You've seen the Instagram gurus sipping pina coladas by a pool in Bali, opening a laptop for exactly 3 minutes, and claiming they made $10,000 before lunch. Meanwhile, you, yes, you, are sitting at home, stuck between three open charts on TradingView, losing half your paycheck because some random dude on Twitter said, "This stock is going to the moon." Here's the harsh reality. Day trading is not a shortcut to wealth. It's a shortcut to poverty, anxiety, and possibly hypertension. If you want to destroy your health while donating your savings to Wall Street sharks who actually do know what they're doing, by all means, keep scalping those 15-minute candles. But if you're even remotely serious about money, you need to understand why 99% of people who try day trading lose. Not because they're dumb, but because the entire game is designed for them to lose. And in contrast, the boring, unsexy, slow grind of long-term investing, the stuff no one brags about on TikTok, is the only thing that actually works. So buckle up. This isn't a motivational speech, and it's not financial. Here's the brutal truth. 99% of day traders quit within the first year, usually after they realize their so-called strategy was just emotional gambling dressed up in Excel spreadsheets. The remaining 1%, they don't necessarily get rich. Many of them simply survive long enough to post their success story on Reddit, which inspires the next wave of victims to enter the casino. And let's be clear, because that's exactly what day trading is, a casino with better graphics. You're sitting there with candlestick charts flashing red and green, pretending you're Gordon Gekko. But in reality, you're just a stressed out gambler in pajamas. At least in Las Vegas, you get free drinks while losing your money. On your trading app, you just get a migraine. The illusion of easy money is what traps people. Influencers will show you screenshots of a $500 profit on a random Thursday morning. What they won't show you? The $5,000 they lost the night before chasing Tesla options. But hey, it's fine, because they can slap "not financial advice" at the end of every post and go back to selling you their $999 secret trading course. And this is why day trading looks so simple to outsiders. Everyone thinks, oh, I'll just buy low, sell high. How hard can it be? Well, let me tell you, it's hard enough to break marriages, drain savings accounts, and send people running back to their day jobs with their tail between their legs. Markets aren't rational playgrounds. They're arenas dominated by algorithms, hedge funds, and professionals who would eat you alive before their first cup of coffee. So yes, 99% of day traders fail, not because they're unintelligent, but because they're playing a rigged game. The house, oh, here's the part nobody wants to hear. Long-term investing is boring, painfully boring. There are no fireworks, no to the moon memes, no adrenaline rush from watching a candlestick bounce like a yo-yo. It's not sexy, it's not glamorous, and that's exactly why it works. Day traders think they're warriors battling the market every morning at 9:30 a.m. sharp. Long-term investors, we're more like gardeners. We plant seeds, we water them, and then we wait. That's it. No drama, no heart attack at every Federal Reserve announcement, just patience. But here's the kicker. The gardener always ends up with food, while the day trader ends up eating instant noodles because his account balance just got margin called. The stock market rewards patience, not desperation. Think of Warren Buffett. The man literally spends most of his day reading newspapers and drinking Coke. He's not hunched over a screen scalping Apple shares for 0.5% gains. He buys good companies, holds them for decades, and somehow ends up with a net worth larger than some countries' GDP. Meanwhile, your average day trader can't even hold a stock for 24 hours without breaking into a sweat. And let's be honest, people hate the idea of waiting because we live in a dopamine-driven world. TikTok? Instagram, instant gratification. Everyone wants results now, but wealth doesn't work that way. If you want fast money, go buy a lottery ticket. If you want real wealth, you invest, you wait, and you shut up about it for 20 years. Not a very marketable strategy, I know, but that's the truth. So the paradox is this: the less exciting your investing feels, the more likely you are to succeed. Long-term investing is the financial equivalent of watching paint dry, except when the paint dries, you're rich. Here's the funniest part about day trading. Everyone thinks they're the exception. You've probably told yourself, sure, 99% of people lose money, but I'm in the 1% because I read 2 finance books and watched a YouTube video with a guy in a rented Lamborghini. Congratulations, you've just graduated from the University of Delusion. The psychology trap is brutal because the market is designed to prey on overconfidence. Humans are wired to believe we're smarter, faster, and luckier than the average person. Spoiler alert, you're not. If you were, Goldman Sachs would have hired you already instead of letting you lose $200 on Robinhood while sitting in your pajamas. Let's be real. You're not analyzing trends. You're convincing yourself that a squiggly line on a chart is divine prophecy. You call it technical analysis, but deep down you know it's just astrology for men. Support and resistance levels, Fibonacci retracements, please. If predicting the market was as easy as drawing triangles, every art major would be a billionaire. And don't even get me started on the emotional roller coaster. You tell yourself you're logical, disciplined, and unemotional. Until, of course, a stock dips 2% and suddenly you're sweating through your shirt, screaming at your laptop like it owes you money. That's not strategy. That's a panic attack. And the market eats panic attacks for breakfast. Meanwhile, the long-term investor is asleep. Literally asleep. They bought an index fund 5 years ago and haven't checked their account since. While you're pulling all-nighters trying to scalp 0.3% gains, they're quietly compounding wealth without lifting a finger. Which one do you think is going to retire on a beach? Hint. Not the one who just smashed his keyboard because GameStop didn't moon again. So here's the punchline. The market isn't your opponent. Your ego is. And trust me, your ego is undefeated at losing money. If you thought losing money on bad trades was painful, wait until you discover the hidden costs of day trading. Oh yes, it's not just the market rigged against you. It's also the brokers, the taxman, and your own stress levels, all forming a conga line on your bank account. First, let's talk fees. Sure, Robinhood says commission-free trading, but do you know what that really means? It means they're selling your trades to Wall Street sharks who feast on your impatience like it's an all-you-can-eat buffet. You think you're trading for free? Cute. In reality, you're paying with worse execution prices, and those pennies add up, just not in your pocket. Now for taxes. Long-term investors get a sweet deal. Lower capital gains tax if they hold for more than a year. Day traders, on the other hand, every little flip is a taxable event. Congratulations. You've just given Uncle Sam a front row seat to your gambling addiction. Nothing says I'm a genius trader, quite like filing a 500-page tax return to report a $6,000 net loss. And then there's the hidden killer, stress. Long-term investing is boring because it's peaceful. You set it, forget it, and let compounding do the work. Day trading, on the other hand, ages you faster than the presidency. Wrinkles, hair loss, insomnia, all because you couldn't stop chasing that one breakout that never came. By the time you quit, you'll look like you've done 3 terms in office. Here's the thing nobody wants to admit. When you add up the fees, the taxes, and the stress-induced health bills, even the rare day trader who breaks even is still losing. And yet people keep trying, convinced they're special. But all they're really doing is working harder to go broke faster. So let's recap. You're stressed, broke, and the IRS is laughing at you. Meanwhile, the long-term investor is busy living life, paying lower taxes, and occasionally checking their account balance just to smile at how boring wealth accumulation looks. Ah yes, the ultimate fantasy. I'll quit my job, trade from the beach, and finally be free. Free from bosses, free from alarm clocks, free from office politics. Sounds incredible, right? There's just one problem. It's a lie. A beautiful Instagram-filtered lie. Here's reality. Day trading doesn't give you freedom. It chains you to your computer like a lab rat pressing a lever for dopamine pellets. While your friends are out living life, you're stuck inside, glued to candlestick charts, terrified to even use the bathroom because what if the market moves while you're gone? That's not freedom, that's bladder control training. Let's compare. A long-term investor can literally go off the grid for a month. They can hike mountains, take vacations, get married, even forget their brokerage login password. When they come back, their investments are still there, quietly compounding. A day trader, meanwhile, can't even leave the desk long enough to microwave leftover pizza without worrying that the S&P futures just turned against them. And don't fall for the laptop on the beach myth. You ever try to see candlestick charts under the tropical sun? Spoiler, you can't. All you'll see is your own sweaty reflection, panicking as the Wi-Fi drops in the middle of your freedom trade. Nothing screams independence like begging a hotel receptionist for the Wi-Fi password because your short position is imploding. Even your schedule isn't free. You think you're escaping the 9 to 5, but instead you're locking yourself into the 9, 30 to 4 market hours, plus pre-market, plus after hours, plus weekends obsessing over futures. In other words, congratulations. You just gave yourself a job that pays less, stresses more, and comes with zero health benefits. So, no, day trading isn't freedom. It's digital shackles. It's solitary confinement with a Bloomberg terminal. You're not free, you're a prisoner. And the cruel irony? You locked yourself in. Here's the ugly truth most people can't stomach. The only way to actually win in the market is to not play the game you've been sold. Forget the TikTok traders, forget the Twitter gurus, forget the guy on YouTube flexing in a rented Lamborghini. If you want real wealth, you need to do the most boring, most unsexy, least Instagram-worthy thing in finance. Play the long game. Long-term investing doesn't make you feel like a genius, and that's why it works. You buy solid companies, index funds, ETFs, maybe a few blue chip stocks that actually produce things besides memes. Then you do the hardest part, nothing. That's right. The true skill in investing isn't analysis, it's patience. And patience doesn't look cool on TikTok. Nobody's going viral for holding Vanguard's total stock market ETF for 20 years. But you know what does go viral? Their bank account? Think about it. Day traders brag about turning $1,000 into $1,200 in a week. Wow, congratulations. You just earned the equivalent of a part-time job at Starbucks, with triple the stress and no free frappuccinos. Meanwhile, the long-term investor buys and holds, lets compounding do its slow magic, and ends up retiring early with more money than they know what to do with. The irony is delicious. The only people day trading consistently enrich are brokers, tax collectors, and hedge funds. The people who buy and hold, they quietly build generational wealth while everyone else burns out chasing shortcuts. So if you really want to beat the market, stop trying. Stop thinking you're the 1% who's going to outsmart algorithms designed by PhDs with billion-dollar budgets. Accept that boring is profitable. And remember, the turtle didn't just beat the hare, the turtle got compound interest. So, there you have it. Day trading, the world's most exhausting get-rich-quick scheme that usually ends with you getting poor slowly. Long-term investing, the dull, yawn-inducing method that quietly makes millionaires while nobody's looking. Funny how life works, isn't it? And here's the kicker, most of you already knew this deep down, but you wanted the shortcut. You wanted the dopamine hit. You wanted to believe you were the exception. Sorry, you're not Neo in the Matrix. You're just another guy in a Discord chat room praying for a breakout that never comes. Now the real question, are you going to admit it? Or are you going to scroll to the comments right now and tell me I'm wrong because your cousin's friend once doubled his account in 3 months? Please, doubling an account is easy. Keeping it doubled is where dreams go to die. So let's settle it. Which camp are you in? Team YOLO Day Trader, living on caffeine and broken dreams? Or team boring investor, sipping coffee while compounding does the heavy lifting? Go ahead, drop your answer below. I promise I'll read it, probably while holding an index fund. And remember, if you're still convinced you can beat the market, there's a shiny seat waiting for you at the casino. Just don't forget to tip the house on your way out.